Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial jungle. And today we're diving into CERO Therapeutics Holdings Incorporated's latest report, and let me tell you, it involves a bit of a stock split and a surprising shuffle of shares to kick things off. CERO Therapeutics Holdings Incorporated, a company focused on what I assume are medical breakthroughs, is filing an 8K report. This isn't a deep dive into their quarterly financials, but rather a snapshot of some important events that happened on the 19th of December 2025. Think of it as a press release for the official record. And if you are new here, please hit that subscribe button and join our Discord community linked in the description below. We break down these corporate filings regularly and you don't want to miss out. So on the 19th of December 2025, CERO Therapeutics Holdings Incorporated held a special meeting of its stockholders. The big news from this meeting is that they got approval to change their 2024 equity incentive plan. This plan is basically how the company gives out stock options or extra shares to its employees, especially executives. What they decided to do was increase the number of shares of their common stock available for this plan. We're talking about an extra 32 million shares that can be handed out. Why is this important? Well, it means the company is planning to reward its people with more stock in the future, which could potentially dilute the value of existing shares if not managed carefully, but also signals confidence in future growth and a desire to attract and retain top talent. Now, let's move on to the voting results from that special meeting. It seems like CERO Therapeutics Holdings Incorporated had a few important proposals on the table. The first major proposal was to approve a reverse stock split. Now, reverse stock splits are often done by companies that want to boost their share price, perhaps to meet stock exchange listing requirements or just to make their stock look more attractive to investors. CERO's board has the power to decide the exact ratio, anywhere from 1 new share for every 40 old shares, all the way up to 1 new share for every 150 old shares. So they could drastically reduce the number of outstanding shares. Looking at the vote for this reverse stock split, there were 8012563 votes for it. This shows pretty strong support from the shareholders for this move. There were also 2,287,082 votes against and 688,702 abstentions. While the majority voted in favour, a significant number were either against it or abstained, which is something to keep an eye on. A reverse split isn't always seen as a positive sign by the market. Next up, they voted on a proposal related to issuing more common stock. This is tied to their Series E convertible preferred stock, which was issued in a private placement back in October 2025. The key here is that these shares are being issued at a price potentially below the minimum price allowed by NASDAQ rules. This often happens when a company needs to raise capital quickly and might have to offer more favourable terms to investors. The numbers for this proposal show 3304540 votes in favour. However, there were 1422095 votes against and 127,164 abstentions. The most striking number here is 613448 broker non-votes. This means a lot of shares held by brokers didn't have specific instructions from their beneficial owners. The fact that the majority of votes that were cast were in favour suggests that the company needs this issuance to proceed, but the gap between for votes and against votes, alongside the massive number of broker non-votes, indicates some shareholder unease or perhaps a lack of clear communication on the benefits of this for the company. Finally, we come back to the plan to increase the number of shares available for the equity incentive plan by those 32 million shares we talked about earlier. This proposal received 2,568,408 votes in favour. Again, there were a considerable number of votes against, 2126257, and 159,234 abstentions. And we see that same large number of 6134448 broken non-votes as in the previous proposal. This suggests that while the company is moving forward with its plan to grant more equity, there is definitely a division among shareholders, or at least a significant portion who are either exercising caution or are simply not providing voting instructions. The report also lists an exhibit which is the fourth amendment to the CERO Therapeutics Holdings Incorporated 2024 Equity Incentive Plan. This is the actual document detailing the changes to the plan which we've just discussed. So, what is the story here? CERO Therapeutics Holdings Incorporated is making some calculated moves. They're getting ready to potentially reduce their share count through a reverse stock split, which can be a double-edged sword. It might prop up the stock price in the short term, but it doesn't fundamentally change the company's value and can sometimes signal underlying weakness. At the same time, they're also increasing the pool of shares for employee incentives, which is a common practice to attract and retain talent. However, the voting results are quite telling. The significant number of against votes and broken non votes on key proposals, especially the one about issuing more stock, suggests that shareholders might be a bit hesitant or perhaps not fully convinced about the company's current strategy or its financial health. It's like they're being asked to trust the company's vision, but a good chunk of them are saying, show me more convincing figures first. In terms of direction, CERO is clearly trying to manage its stock perception and incentivize its team. The strengths are in their continued efforts to align employee interests with shareholder value through equity and their proactive approach to potentially meet exchange requirements. The weaknesses, however, are highlighted by the shareholder sentiment reflected in the voting outcomes. The risks involve how the market will perceive the reverse stock split and how the increased share count for incentives will impact dilution over time. Opportunities lie in the company using these newly granted shares to drive innovation and growth, which would then justify the increased share pool. Overall, CERO Therapeutics Holdings Incorporated is navigating a complex path. They're making operational decisions that could impact their stock and their employees. While they've secured approvals, the divided shareholder voice is a signal that investors are watching closely. We need to see if these moves translate into tangible business improvements and a stronger financial performance to truly win over the market. Alright, that is our breakdown of Therapeutics Holdings Incorporated's latest report. What is your take on these numbers and what they signal for the company's future? Do you think the reverse stock split is a good move or a sign of trouble? Let us know in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out the Discord in the description. Thanks for watching, see you next time.